guys, hope you're doing well. Sorry about the late bulletin because I had issues with the trading station and I was trying to get the market scope 2.0 up and it just simply wouldn't load. And it loaded the main terminal but not the market scope, and that's what we need for all the juicy data for the bulletin. And so we can see, for example, we've got DAX. We should be above that box. They sold here and we are, and I think what's going to happen again with DAX is that they're going to short it again. It looks like that's the trajectory. They're going to start selling. I mean, it kind of makes sense. You probably would want to sell up here. You're looking left, there's some resistance up here. It's a bit tricky because it's kind of like doing a weird formation. You can see like a channel break here, and you can probably argue it's kind of like doing a weird formation. I can't make any heads or tails out of that. We've probably got an M, which is bullish, which I can maybe show you. I'll show you what I mean. So yeah, there's this DAX, so this could be doing an M, which is bullish, like I say. So you get the so something like this. So yeah, well there's the M here. So these are normally bullish harmonics. So you make it's like a equal low there, which is interesting. And so it's done that. So that's normally X, A, B, C, D, buy. So in that way, it's okay. And we had a channel break as well, which is bullish. So we could be fairly bullish on the DAX. So there's the buy. Okay, so whenever we make an M, D is normally a buy, and B is at the same level as the D, which is like why it's quite a strange formation. Quickly look at Dow Jones. They'd sold here, so we can draw a box. And basically just here is this one. They sold there, they shorted, and it was a big old candle. It's quite a scary candle. So that's where they'd sold. So that's going to come into play as a support. It's going to act as a demand. Okay, so if we come back down 49600 ish, that's probably going to bounce there. Okay, S&P, and we can probably draw a box here. So it's this one here. We had like a doji candle, and then we had like a long wick above. I think that's a dragonfly, or Greystone doji. That's what it put. I think that's what that is. But it got them to short, and normally technically that would be a bearish sign because you've got the selling pressure above and very little buying pressure, and that could have been a trap. So you've got to be careful when you're looking at technical analysis, candlestick analysis. That would normally be quite bearish. There, can you see? I mean, that makes sense because the selling pressure is greater than the buying pressure. So you think, oh, the bears have stepped in, but in fact it could have been a trap because what happened is that they shorted like the big fish, and then they saw what the crowd were doing, and they thought, oh, they're selling, we'll reverse them. And we've come up a lot since. So that's the S&P. So that's probably a technical trap for the retail traders. So be careful. Remember to maybe look higher up than H1. Maybe look at H4 daily and gold. And we can make we'll do two boxes, and then we can revisit these at some point later. And these are probably going to come into play. So there's the wick into that demand, so that's fine. They'd sold there, so price came back into their entry and it bounced, and then they went long up here. And we'll look at the spreadsheet and the indicator that I created. It's got the ratios indicator on there. So therefore we're just coming from crossover to crossover. So pretty reliable, pretty good. Okay, so let's talk about the spreadsheet quickly, and do note that the bubbles have been slightly naughty in a fundamental way, you know, because they're short in the pound and they're going long New Zealand dollar Aussie, but I think we're going to be risk on. And so, if so, we are going to rally on risk appetite. These two are going to do okay. So we may see the bubbles being a little bit naughty. We can check the quality of the sentiment by checking the failure rate. If it's low, it will tell you that they're getting paid. Oh, it's a bit silly. Why has that done that? 50%, so it's 50-50. It's flip a coin, so it's not ideal. So there's the bubbles there. I would probably not want to sell those two if we're going to rally on risk appetite. If the S&P really moves higher, these two are going to do okay. So you want to be careful there. Let's talk about the indicator. And what I've got it to work alongside the ADX matrix. So I'll show you the speed. So currently, there's an issue with the data. The actual graphical data is fine, but if that number value is wrong, that needs to just get fixed, which I'll do today or tomorrow. So let's have a look at, for example, maybe AU. And then we can see the, actually 5 minute might not have been the best example. And what it does, it'll scan 90 days of history. And what it does, it reads the Google Sheet, and there's, I think, 29,000 rows of data. So it's going to take a little while to download. So it can't really tell you too much there. We come to the H4 perhaps. That may tell us a little bit more. There you go. So this is them reducing their shorts. So if they go long, this is going to fall. Okay, so this is a little bit bearish. You can see the reaction. You know, we potentially could have topped. This is them, you know, probably getting stopped out, to be honest with you. And this them reducing their longs, and they may actually flip short. And where are we right now? What it needs to do, it needs to tell you the correct current sentiment, which it doesn't. So that needs to get fixed. And so this could be potentially a bit bearish, but there's one scenario that they could do, is that they can add short, and then we can come up higher. So according to the bubble, Aussie should fall, but however, fundamentally, is that we could be risk on, and then this could do okay. So this is potentially a bearish scenario for the Aussie USD. And here, you know, you can see the top in action. This is them getting stopped out and reversing, and you see the reaction and price action. So I mean, it didn't take too long to download the data. It's got 90 days worth of data, so it isn't going to be instant. One thing that we could do is have it download all the history upon the launch, so it downloads the JSON files of every one of these instruments, which would cause it to lag quite a bit when you load the indicator for the first time. So that's today's video. I kind of would like a stronger Aussie and a stronger New Zealand dollar for my manual trades, and we can see dollar CAD at the top, dollar yen, and we got NU, EU at the bottom. So it's okay, it's a good demo. I'm going to try and work on that so it does show you the current long percentage. And one thing we could do is add more data from the spreadsheet into an indicator. So we can look at the open interest, the positions, volume delta, and things like that. So there's today's video. Remember, we are going to be quite risk on, I think, if we look at the FXCM trading station. So this Aussie might be alright, and it might mean that the crowd might just get paid on these two. And we know we're about 50-50 on the failure rate. So they're winning and losing in equal measure. So it's not very useful. We'll see how we go. And I'll be back on the weekend for the COT data, and we'll see how they're positioned for the dollar, because we've got a new Fed chair, and we're going to have like some forward guidance from him, you know, going forward. So it's going to be an interesting couple of weeks. If you want the indicator. You have to be patient and wait till I've you know, sort of quality checked it and made sure it looks fine and it loads fine, and we've got rid of that error, that issue, that data there. So I wish you a good day. I'll speak to you guys soon.